Hey guys, welcome to the Ken McElroy channel. I'm your host, Danielle, and I am here with Ken.
Hey, what's happening?
So first I want to just kind of go over what we're offering here at KenMcElroy.com. Last week, Ken did a great podcast with Ryan Pineda on how social media can help your real estate business. I think that's something you should definitely check out.
For sure. He was great. Young guy. He's buying all kinds of houses and started, learning from nothing. Started with one house, and now he's very, very successful.
Exactly. And then over on YouTube, you just did a video last week on the 15 businesses to begin in 2021.
Yeah. So here's the deal. Like a lot of people got really impacted during all this, right? And still are. There's obviously we talk about the types of recovery, K-shape. I think it's a K-shape. There's a lot of people that haven't. And so side hustle is now a thing that people are talking about. And
Yep.
These are things I've looked at. I really think that these are businesses that are going to soar in the next few years.
So make sure you guys check that out. It's over on the YouTube channel. And then this week's newsletter, we're discussing why Ken started KenMcElroy.com.
Awesome.
So, yep. And last week on our live, we did inflation with the stimulus. And a lot of states have started to cut off their federal stimulus.
They have, yeah, the $300. I know it's kind of, I guess, being looked at.
Yeah.
I didn't know that. I guess Biden could literally say, hey, we're going to keep it. I think he can override the state, which is interesting.
But he hasn't.
He hasn't, but he does have the power to do that.
Yep. And then lastly, we have our 7-day free premium trial. You just have to go to Premium Live, all one word, over at KenMcElroy.com/premium, because we're going to be answering all your premium questions on the live later today.
Good.
All right, so let's dive in. Today we're going to be talking about the controversial topic of what's better, real estate or crypto. Ken obviously believes, real estate, but we're gonna
of course
dive into why. Bill already said, give me a hard asset that pays me monthly any day. So that's a good start, really.
Okay, it's over.
Yeah.
Bill, thank you.
That's
We don't
it.
have to say anything else.
Well,
he stole the thunder.
He did. Well, let's talk about this. So, everyone understands that you want to own property, and everyone understands the basics between owning property and owning crypto on a surface level.
Well, I get it. I was in Tucson this weekend for my son's college graduation, by the way. He graduated from Eller School at University of Arizona. There were 900 kids that graduated. And so, of course, you're hanging out with all these young guys, and all these kids are, they're very excited about whatever the next chapter is for them. But what are they talking about? Crypto.
Yeah.
Everyone. And so I get it.
People have made a lot of money on crypto.
Oh, unbelievable. So if you don't have a lot of life experience, you don't have a lot of job experience, let's say, I totally get it.
Yeah.
Like that, I would do that. I mean,
but there's also some savvy investors that are investing.
Yeah. I don't want to
too.
discount that, but the point is, I think everybody's talking about it because it's easy.
Yeah,
it's really easy to take stimulus money and put it into Bitcoin.
Right.
Like literally very, very easy. They've made it very, very easy.
Well, and Cordic on YouTube had said, did you realize that Bitcoin was below $8,000, about a year and a half ago, or actually, about 6 months ago.
Yeah.
And we're not discounting that you can make money on crypto. I want to be very clear about that. It's just we're trying to discuss why we prefer real estate to crypto.
I'm not trying to bash it, guys. Listen, but I used to live in Las Vegas, okay, and I remember, especially my friends would fly there, and we go to town. And everybody wants to gamble in Vegas every time. Well, when you live there, it's really not a thing. But you go. So every time we go, then we go home, and what would we talk about? Am I up? Am I down? That's essentially what is going on right now with crypto. That's kind of the thing. Am I up? Am I down? And some days you're really, really up, and some days you're down. And the fact that there's all these gurus out there trying to tell you how to do it, maybe they do.
Yeah, they do a lot of research on it.
Yeah. But I don't know, man. Like to me, it's
Well, let's just dive in just to start. To start, people will always need housing, like the fundamentals, right? People will always need a place to live.
well. Listen, if Musk can go on Saturday Night Live and crush one of the cryptos or a couple of them, that just can't happen for real estate. It's not going to happen. It's not going to have these wild rides based on news. It's real estate is really slow. It's a hard asset, as Bill said in the beginning.
Mm-hmm.
It's something that people need. Every single person that's buying crypto right now is in a place somewhere.
Right, they're renting or they're owning or
they're
whatever.
renting, owning, whatever, and that's kind of the point.
Right, and it's something that our society needs now. Like we said before, you have a physical asset. With crypto, you're kind of relying on the platform to hold whatever assets you own.
Not kind of.
Yeah.
You are completely right. And so to me, again, I love going to Vegas. I go to Vegas. I bring cash. I spend. I gamble on college football games. I do all that kind of stuff. There's nothing wrong with it, and it's fun. But this is not something that you should bank your future on. That's my point.
Right. And like a cost of living says, cryptos, like most stocks, aren't worth anything unless you sell it. Hello, short-term capital gains, which we are going to talk about.
Yeah.
There's no leverage like real estate, tax-free in a few years. So
yeah. And so that's the other piece that it's like these realtors, realtors, right?
Yeah.
I think how hard is it really? It's like a checker at a Target. Well, you have whatever you have, and you're walking down the aisle, and you pick one, right? You go through the line.
Right.
So these realtors get their commissions, and they move to the next client, and they make money based on relationships, but everything's really kind of buttoned down for them. Like there's not a lot of, and so the point is they're going to pay these high taxes. And the commissions, these people that are making this kind of money, when you sell a Bitcoin, you're going to have these big tax.
Right.
Today's tax day, by the way.
Right. Yeah.
So
it is. Yeah.
right. So anything. Yeah. Right. And so don't forget. Like I told you that story. Flippers. When I did that big apartment complex, and we bought all that real estate, and we sold them off one by one. We made a bunch of money, but I paid a lot in tax. So what a lot of the crypto people and a lot of these people that are making money, selling houses right now or flipping houses or building houses and selling houses, they're going to be heavily taxed this year.
Right.
And if done right, if a real investment, actually you get to utilize depreciation expense and component depreciation and all the things that you get are tax benefits in owning real estate long term. That's the difference.
Yeah, and so let's go back to the fact that it's a physical asset and that Bitcoin's not. So a lot of people don't know about Enron and different entities like the dot-com boom. Like a lot of our viewers are younger. So, what happened with Enron is people held stock in Enron and Enron collapsed and they lost kind of everything. Now, that might not happen with like Bitcoin because I guess it's a little bit more well known. But a lot of these altcoins, that people are investing in, I mean, they could just be wiped off the map.
Yeah, I don't know enough about it but the truth is I've been massively burned in the stock market, by a tip, all right,
yeah.
or whatever it is.
Mm-hmm.
And I got, guys, when I was a lot of people's age in my 20s, I did this. I'm speaking from experience. I remember I got $250,000 as I was in my late 20s on something, and I put it into, at the time it was called HSAC, high speed accident. I can't really remember. It was a stock tip from a friend,
yeah.
and it went almost to zero. I
right.
literally I'd worked my ass off trying to get all this money, and so that was when and also I have other things. This is a stock market. It's not Bitcoin. I understand everybody's, this is different.
Yeah.
It isn't. It's just speculative. That's the whole point.
Yep.
And the thing about housing is you just use math.
Well, right. And that's the cool part. And to open that up, the business maniac said crypto doesn't produce cash flow.
Yeah.
So, if you buy something.
By the way, thanks guys for helping me out.
Yeah.
Like these are These are things I should be saying.
Right? But so when you buy a piece of property, you buy it for a set amount, and if you do it right, you have a set mortgage payment.
Well, your tenant pays off your mortgage.
Right, exactly. And then
you get cash flow.
Right, so you know the rental amount that you need to cover your mortgage and to cash flow.
Yeah.
And traditionally, if you look over time, from the beginning of time, rents typically go up, typically. So if you're covering your cash flow, you're covering your mortgage with the cash flow from your tenant. And we all know that we're having inflation because we talked about that last week. And so your rents are probably going to go up. You're going to cash flow if you buy the right piece of property. It's not speculative. It's math.
It is. It is. And guys, listen, the strategy is, even for me, back in the day, I would buy something, flip it, make a little bit of cash, and then invest for the long term. There's nothing wrong with that strategy. But if you're going to flip, I watched a zillion, thousands and thousands and thousands of people lose everything back in the early 2000s by, it's going to be great next year. This is the whole point. There's nothing wrong with making a little bit of money in crypto. There's nothing wrong with making a little money in flips or commissions for, these realtors or whatever you want to call it. But at the end of the day, I know so many brokers and real estate people that don't own anything. It drives me nuts. When I pick my attorney, I make sure that he owns investment real estate because we're speaking the same language. So, if you're making all this money, don't go out and buy new cars and new, doodads. Go out and invest it into cash flowing hard assets. That's the point.
And also don't, you bring up a good point. So house flipping is a little bit like crypto where, you make some money. So you want to do it again. And you want to do it again. And you want to do it again. And then eventually you're going to have a correction.
There's nothing wrong with doing it. The point is, if it's a great way to make money, it's like the Vegas at the craps table or when you're really up. And I've been there a zillion times, and then you're like, I'm gonna keep going up. I don't know what that little mechanism in your head is when you're way up and you're like, it's like irrational. Like you just keep going. It's going to continue to go. That's the part that is the most important, is that moment.
Right. And you don't want a huge chunk of your money in that moment.
Right. You want to be able to take some hedge it, like what you did with Bitcoin.
Yeah, to be candid, I have some altcoins. I have Bitcoin. Yeah. I'm not anti-cryptocurrency.
But what she did was, I was great because we're talking about it, and she's like, listen, once I doubled my money, I pulled out my initial investment. Now I'm playing with house money.
Yep.
That's different.
Yeah.
Nothing wrong with that, right? And now you're on a little bit.
But it's a small percentage of my portfolio.
Still, yeah, but it's a strategy is my point. Like we have friends, you and I have friends where they're, everything's in, and these are like doctors and, these are people that they're putting a lot of their money in there right now. And I'm just saying, for somebody who's been through that, luckily I went through it in my 20s. It can flip on you pretty quickly.
Well, and let's talk about the government. So how the government feels about real estate versus how the government feels about cryptocurrency.
Well, all you got to do, if you really want to see what the government wants, take a look at the tax incentives. That's it. So, a lot of you guys may or may not remember the alternative fuel as an example. When they wanted people, when they wanted people to have those alternative fuel vehicles, they threw massive tax at that program, and people got the same thing with solar, same thing with oil and gas. If they want oil and gas drilling, they do, and they do it with housing.
Yeah,
that's the whole point. So,
they need housing.
Yeah. So if Biden, and he might, if Biden starts to cut all these things, we did a video on this, step up in basis, 1031s, and starts to increase the capital gains tax. What will happen, without a doubt, is money will stop flowing into those spaces. Period.
Right.
That's what happened when Oregon did the rent control law. As an example, money stops to flow. It flows where it's easiest, and that's the point. Right now, the government is saying we need housing. And by the way, so if Biden does that, which he very well might, then that money will get redirected somewhere else.
Yeah, it could be the crypto market.
100%.
Yep.
Who knows? But that is the point. So if you really want to see what the government wants, just pay attention to the tax code.
Well, here's what I know the government doesn't want is a competitive currency or coin that's going to compete with the dollar.
Trust me, guys. Like, I don't know if you guys know the history of we became the world's reserve currency. We took it away from the UK, the British pound, I think in the late 1800s after the war. So we've only been the world's reserve currency for about 100 years. If you look before that, it was the British pound, British sterling. And I'll tell you, we've actually had a number of currencies. Back in they used to remember there used to be a saying don't take the Continental. The Continental was an actual dollar, the U.S. dollar, that was printed in the U.S. And so there's all these currencies that have been printed all over the world that are now worth hardly anything. And so paying attention to currency is a big deal, in my opinion, because a lot of people are saying I don't believe it. Actually, I don't think we're going to be replaced in my lifetime as the world's reserve currency. But make no mistake about it, China's coming after us for sure.
Yep.
They want to be that.
Definitely. So, and then also just, the gold standard and different things, the government back in the day tried to collect gold and they kind of hammered gold because people were using that.
Well, they didn't just hammer it. They didn't just hammer it. I think it was FDR, Roosevelt actually made gold illegal to hold. Period.
Right.
Imagine that in the U.S. Like, I think it was in the 30s. I could be off on the dates, guys. I'm sure you'll hammer me in the comments. But the point is, somewhere in the 30s, I think it was 35. We said holding gold was illegal, and you had to turn it in, I believe. And then what they did is they, in '71, we had what was called the Brenton Woods Agreement, and Nixon canceled that agreement. And then what that did was that opened the doors for printing, for currency printing. And so in '71, if you watch, the dollar used to be tied to gold.
Right.
And if you watch, after that period of time, that we started to print. That's why the other countries are mad at us.
Right.
Think about it. Like we are the world's leading consumer. So if we're buying $1 million of stuff from China, we're paying them in U.S. dollars, and they're taking those dollars, and then we're printing it away, right? We're making it devalued. So just take a look at the value of the dollar from like the 70s. It'll blow your mind.
Well, and like Mr. Wright said, with the manipulation of the currency by the U.S., crypto is bound to happen. And that is 100% true.
Right. Yeah,
that is totally true.
This is right.
But the government does not like crypto, and there's things that they can do to make people, not be able to use it or trade with it or whatever.
Didn't China come out with their own crypto coin?
They came out with their own digital currency.
Yeah. So there you go.
So basically,
they're the first country to do that, I think, and I'm sure the U.S. is going to come out with a competing one, and I'm sure that there's going to be regulations around the others, and it's going to. They're going to do whatever they have to do to maintain that control, guaranteed.
Yeah, and Mr. Wright also says crypto is faster than fiat and offers a way to do things without banks. So let's be clear. Crypto probably is a better system than the dollar, but our government's very powerful.
Yeah,
and they kind of decide.
Listen, I love it. I think the whole thing's fascinating.
Yeah.
If you could sit back and just kind of watch it all, it's like a big old chess game.
Yeah.
And it's really, really cool to see all these new crypto coins coming up. The blockchain is obviously
even
amazing.
our trainers made a bunch of money on Dogecoin or whatever.
Right. He's 24 years old. And I love it. I flippin' love it. He's going to try to buy a house with it, which is a very wise thing.
Yeah,
because he's renting.
Yeah.
So these are good times for a lot of people. Just don't just be very careful about making it a long-term strategy and it's going to go up again,
Right. Because just like, remember the .com thing too, our viewers
of
might
course.
be too young to, but everyone was buying websites and the .com, and you would buy a website and it would shoot up in price and you would sell the website, but then all of a sudden that just bubbled out and
right.
So
That's
it's
exactly
similar,
right. Yeah. Just go back and look at history, guys. It's, it will teach you a lot. And I think a lot of times, You just need to be careful.
Yeah, so just to sum it up, we're not saying don't invest in crypto. We're not saying that it's not a smart move. We're just saying we prefer real estate. And if you are investing in crypto, as you begin to earn some money, it might be something you want to look into long term.
I just prefer things that provide passive income. That's my biggest thing, and
Right.
It could be a business.
They don't go up and down. It's just a passive, steady.
Use the money to go do stuff, right? Like there are things that go up in value during inflation, and there are things that produce income and passive income. That's the whole point. The whole point of this show, the whole point of me doing all this work, and trying to educate people is so that you don't have to be in a position the next downturn, and there will be one, guaranteed. You won't have to be in a position of a salary or some money coming from someone else, even the government. This is all about control of your future. That's what this is all about.
Yep. And Elijah, I love this. He says, where do I invest as a 12-year-old?
Oh, man.
We think it's awesome, Elijah, that you're watching. That's really cool. You're going to go places.
I would say education.
Yeah.
And make sure you ask your parents.
Yeah. But definitely get educated, start understanding real estate so that when you're an adult, you can just hit the ground running.
Yeah, we had a 14-year-old sign up for our premium.
Yeah,
right?
We did.
So,
that was cool.
You guys might know we have a premium that we do. And
he's watching right now, too.
Videos and stuff. And so I said to Danielle, let's get him on the show. Maybe you can school some of the adults.
Well, we're having a YouTube video in July of that. I think she's 14-year-old that bought a house with her allowance. She saved up for a down payment on a house, and I think that's going to be out in July.
Ooh,
so.
That's awesome.
Well, so let's jump over to the premium questions. First, we have Lincoln. He says, how do you build business credit if you put each property into an LLC?
Okay, good question. So the LLC is not supposed to be, if you're running a business in there, it's obviously all the income that flows through. What I don't want you to confuse is the LLCs are for asset protection. So if you own something and you put it into an LLC, it's for asset protection. So you will build business credit by the income and the expenses rolling through that LLC. You'll have a tax return and all that kind of stuff. You can still do a roll-up. So for my company, we have well over 100 LLCs. We roll all the way up into MC companies.
Yeah.
And so MC companies has a corporate guarantee based on all of these different entities. So the banks don't care, how it flows up because you're not trying to avoid anything. And what you're trying to do is have asset protection. It's the opposite of commingling. So think of it this way. If you have a bank account, I was watching Kevin O'Leary, the Shark Tank guy, and one of the questions that Stefan, one of the real estate guys that I really I watch on YouTube, he asked him how many streams of income do you have, and he said 30, which is interesting, right? So I thought that was interesting. So those 30 income streams are all in different companies, all different LLCs, all different entities, maybe different partnerships, and then they all roll up into a holding company, which he mentioned in the video. And so that's how that all works. It doesn't all have to run through one bank account. It can run through multiple bank accounts and then roll up.
Yep. And I do know that you also, if you own properties, you want them in their own LLCs and all of that too, because that was kind of the other part of his question. Claudia says after she makes money with her Bitcoin, she's going to invest in real estate. And honestly, that's the way to do it.
In my opinion.
Yeah, it's definitely the way to do it. So Erica from Premium. Banks are moving so slowly. We've been approved for financing for 4 to 5 months, and this is super typical. Just waiting for them to send the contract to sign. Any advice on how to get things moving?
Yeah, so this is a frustration, even at the stuff we're doing. So I know banks are, think of what's happening. It's not getting a lot of press. Banks are taking back paper, so nobody's really talking right now about the defaults. There's a ton. Mostly on the corporate level and on the big institutional side. So, it doesn't really affect a lot of folks, but, think of San Francisco, how vacant it is. We'll just pick on that city. There are people big institutions that own those and they're defaulting. So You're not really seeing it on the residential side right now. So it's all connected, right?
Yeah.
So what my suggestion to you is, if you're going through a broker, and there's nothing wrong with brokers, that's one more step away from the actual bank. Because let's say Wells Fargo is a bank, and you might be going through a broker that might be actually getting the loan through Wells Fargo. So if the more direct you can be, the better off you're going to be, and also some are just a lot more organized than others. I know from personal experience, and I think you've had this. Like, I know you were super frustrated with
it took
with your broker.
a long time. Yeah.
With your broker.
Yes.
He wasn't calling you. You were calling him almost every day, emailing him, texting him, and he would promise. And the real truth is he's actually getting his money from someone else. So think about this. It's almost like it's like you handing over all your stuff to somebody and then them getting it ready and handing it to someone else. That's essentially what's happening. So there is a middleman with the brokers.
Yeah, and you got to be tough on your brokers too. I mean, there's definitely, if you push them, sometimes that there's more because they have a lot going on. You know, I always love the saying, it might be your priority, but it's not necessarily their priority. So you have to just keep getting in front of them and keep reminding them.
Think of what's happening right now. These rates are low. These guys are busy, and they have stacks of files, and yours is somewhere in there. And so the squeaky wheel does need the grease. Get the grease,
the oil,
or whatever you want to call it.
Yeah, it gets the oil.
Seriously, and that is it. It's the same way with attorneys. It's
anything really.
Yeah, I don't know if a lot of times people are like, oh, okay, we engage these people. They've got my back. They're gonna bring this across the finish line. No, these are people that have to be managed pretty hard, in my opinion.
Yep.
And so I actually have, there are things that I do even today where I tell my assistant, I want an email every Monday to this person.
Yeah.
Every single Monday.
Right.
And it's on her, she's like, okay. And then they respond, right? They're and there has to be lots. You have to phone call and text and email. And what you're trying to do is just move yours to the top. That getting through the process, I wish I could help you more.
Yeah.
It's super frustrating right now.
And so we're having a lot of questions on YouTube of is Austin a good market? Is the Bay Area a good market? Is Nashville a good market? And we kind of always say this, but any market potentially can be a good market. You just have to find a property that cash flows.
Yeah. And, I mean, those are good questions, but tough questions because I've owned stuff in Austin as an example. I can break Austin up into 8 or 9 different submarkets. Right. And they're all very different. Yeah. Downtown is very different than, let's say, over by the University of Texas, which is very different than, maybe up a little bit more south or a little bit more north. And so, it's a very broad, interesting question. Now, I think and it's also on fire. I mean, Austin is one of the hottest, and so is Nashville, one of the hottest, those couple of the hottest markets in the country. I can't give you advice on investing because I don't know specifically what it is you're buying, if you're buying under market or over market, if you're using hard money or not, or your money or not, or or if it's a good location or not, or if it's rented or not, if it's vacant or not, if it's a 1 unit that's vacant or
it comes down to the cash flow, your payment on it with all the expenses versus what you monthly charge your tenant, and if it cash flows, then it's a good deal.
Yeah, and do I think Nashville and Austin are going to grow in the future? I do.
Yeah.
Yeah, but
the Bay Area,
I don't know.
Possibly.
Yeah.
So Nate from Premium, I'm looking at a new construction with high appreciation potential. It's a construction to perm type loan, but I'm reconsidering since the interest rate might be increasing, so I'm scared of getting stuck with a higher interest rate when the loan gets converted to a 30-year fixed. Should I just be trying to find a ready property and lock in the low interest rate loan now?
Okay. So there's a few things in there that are assumptions. Number one is that it has high appreciation.
Yeah. Okay.
I don't know if that's true or not true, but that is a big factor as to what I would do next. Mm-hmm. If you believe it so, then I'll just go with that. A true construction of perm means that you lock your rate in at the beginning. So if that's the case, that kind of contradicts the second piece of the question. So, and I'll just give you an example. So when we do we do deals through HUD, Housing of Urban Development, they have a program called a 221D4 program, and it's a true construction to perm. So you literally get your construction loan, and you actually know what your fixed loan is on the day you get your construction loan. It is a true construction to perm. It converts. If you're doing something that is not known today on the fixed, then it's not a true construction to perm. That's just a construction loan, and the lender wants the perm. And so it's a big difference. So you got to be careful. There's some massive advantages to a true construction to perm, because you can now know what your fixed rate loan is later. One thing, if you are going to sell, that can bite you in the butt, because it might come with a prepayment penalty. In other words, they're taking the risk of rates going up or down, and so you might have some kind of prepayment penalty in there, which is exactly what the 221D4 has. So these are for long-term holds. At least that's been my experience. But otherwise, just go, if you don't know, and it's not a true construction to perm, then get your construction loan at the lowest rate you can, and then you're just banking on the market later, and then it's a race against the clock. The one thing that's really, there's a couple things that are wild cards. One is construction costs. And labor. And so, we're having that issue. So that's another factor that you need to consider. Something that might take you, let's say, 9 months or 10 months to build, might be a year and a half. Okay, so now all of a sudden you're pushing that risk out a little more. And so that's a good question, though.
Yeah, and another thing, though, is don't try to do construction unless you're skilled in it.
Yeah.
Because I don't know if you are. I'm not saying that you're not.
And you might be. Make sure that you have a general contractor that knows the numbers, has big crews, has relationships with subs, and all of those things. You want to lower your risk everywhere. If you're just trying to, hire your, brother-in-law who's, trying to do a startup, again, you're going to want to pass the potatoes at dinner, you don't want to run into that.
Matthew from YouTube, he has an interesting one. He said, what are your thoughts on buying old apartments turned into a condo? So a condo conversion, unit, just a unit.
I've done a lot of that.
Yep, just a unit. And those are great. I have 2 of them.
They're big flips. That's all I have to say about that. I've done.
Yeah.
Yeah. Basically, you take a property and you sell them off piece by piece. I've done that with 4 units. I've done it with 8. I've done it with 300, So I have a lot of experience here.
Well, I think he's just talking about a single one, like him as a landlord just buying a single condo, basically. That used to be an apartment.
Oh, yeah. I'm not sure quite how to do that. What we're used to doing is when you buy something that isn't, let's say, condo mapped or has a horizontal property regime or whatever, basically it means you could sell it off one-off. So I'm confused as the word condo.
I think like how I bought, mine, and they used to be apartments and now they're just condos. I think that's what he means.
Well, but somebody has actually, so an apartment building is an apartment building, and so it has one tax bill. Mm-hmm. Okay, so if it's 8 units, 10 units, let's say it's 10 units. It has one bill, one utility bill, one tax bill.
Right.
Okay, you have to actually convert it into 10.
Yeah.
You have to break it up.
Yeah.
And that is expensive. It's legal. So, and then from there, every one unit has its own title. Yeah. As opposed to one title for 10 units. So all that has to be done.
I think it's already done. I think he's just saying, how do you feel about buying something that has already, basically like I did with mine.
Oh, okay. Yeah. I just, again, it just depends on the math.
The math works, but it's great. It's low maintenance, like he said. Just got to watch out for those HOA costs. Those can kind of creep up. I mean, I've seen some in Phoenix, like $500-$600 a month, and you don't want that.
I'll give you a quick story. So I did a condo conversion on a big property in Oregon, and it's 301 units, and it's on the river, and has this beautiful boardwalk that runs along, and has the boat slips, and I mean, it's right downtown Portland, which of course is not in a good spot right now. But regardless of that, I've owned it for, I don't know, 12 years maybe, and it's been rented for 9 to the same woman. Well, I decided to sell it because Portland is not doing well. And so I'm like, well, I'm way into the money. I'm going to sell it. I don't want to have to deal with the rental market in Portland and all the politics around, all the things that are going on out there. So I decided to list it, and the real estate agent said, oh, by the way, there's a $20,000 bill that you owe for the pier work, for all the boardwalk and everything that's running along the river. Mm-hmm. And I'm like, oh, what happened? Well, apparently the management company, the HOA, didn't manage all this work for years and years and years and years and years. And then all of a sudden, obviously, it was a big number because my one unit out of 300 was $23,000 or something. Yeah. So those are assessments, and those are things that happen from poorly managed HOAs.
Right. You definitely right. That's a good point, Matt. When you buy something like this, you want to check the HOA. Look at and after you put the offer on the property, they have 10 days to get this information to you. And basically in that HOA report, you're going to see how much they've been assessed over the past few years, if the dues keep going up astronomically, and all those things are red flags and signs you should back away from that deal.
Yeah. So said another way, anything that's common area, parking lot, roof, paint, doesn't matter, stairwells, all those things are the responsibility of the individual condo owners. Period. And so if they've been neglected, which in most HOAs do never want increases in their dues. So what that means is you got the people that live there are trying not to increase their dues. So next thing you know, things are going up, and you're going to slowly start to see deferred maintenance at some of these places. Those are real things that have to be addressed at some point, and they're paid by the people that live there. Period.
Yep. But I have 2 of them, and the HOA is in great shape, and it's been a lot less maintenance than my house as far as just issues that come up. There's
massive advantages to HOAs, but also there's a lot of them that are managed very poorly.
Yep. And Jeff says an HOA could ruin his NOI sometimes, which it can. You have to always,
Yep.
All right, so let's get to hearing from Premium. This is our 14-year-old. So he says, hey, Ken, I'm 14, and I'm reading all your books because I want to learn how to do real estate and funding. What type of lawyer do you need to negotiate prices in a big deal?
Great question. Okay, so there's lots of different kinds of lawyers that we use for every deal. So that's number one. So, and I'm just going to walk through them all. So we've had environmental lawyers. So when you buy something, let's say like in that Oregon property that we had, it was up against the river and it was over an old railroad spur. So you have environmental lawyers that need to step in and take a look at all that. So that's protect you, protect the homeowners. That's number one. Number two, you may have a securities lawyer. A securities lawyer would be more along the PPM or the private placement memorandum. I have securities lawyers that do those. And basically, if you're raising money or syndicating money, then you have lawyers for that. We have lawyers that actually take a look at our mortgages, our loans, so you have those. And then what you have for real estate is you have a transactional lawyer. So you want to look for a transactional lawyer. We have a lawyer, his name's Sid Cohn, and we've had him for, 15 plus, almost 20 years. And then on the other side of that, I've had to hire litigation lawyers, and then you have to hire lawyers on the insurance claims. So, there's a whole bunch of lawyers. And then if you get sued, which I've been sued on some construction defect things that we've done in the past, then you have to hire lawyers that are smart around construction defects. So they're basically like ambulance chasers or personal injury lawyers. Mm-hmm. So there's, what you want to do is you want to get really specific. Same thing with I know you're in the process of putting together your trust.
Yeah.
You have a trust lawyer, so you have lawyers or, that do estate planning. There's all kinds of different lawyers for different things. And so for this, you want a lawyer for the real estate transactions.
And that's for the big deals. Like I've never had to hire a lawyer for any of my small stuff. No. I guess Mauricio helped me put them in LLCs, and that was a few $100. But other than that, it's not like on a small deal you would need an attorney. But yeah, when you're putting together large deals with partners and things like that, you're going to want to engage somebody.
Yeah. So on a small deal, a lot of times you'll have kind of a boilerplate purchase and sale agreement. And that, a lot of times the lawyering happens on the negotiation of the purchase and sale agreement. Like the deal that we're in right now, we were negotiating environmental rights, the water rights, oil and gas rights. We were negotiating, we have a lot of the residents aren't paying rent right now because of the pandemic. So, there was a whole bunch of stuff around that. So there's all these things on whether units are rent ready when you buy it, or they're not rent ready, or, there's a bunch of things that are transferring to the new owner. And so, and due diligence items and all the things that you find, and, what if you find mold and, all those kinds of stuff, that's all handled at the negotiation table. But a lot of times on the smaller stuff, you're going to have these boilerplate purchase and sale agreements that, they're going to be pretty non-negotiable.
Right. So Linda wants to know, why do you want to use debt and not personal income for your investments?
So it's a really, really good question. So a lot of it's going to depend on where you are personally. So I know, like Danielle here, she doesn't want a lot of debt.
I don't. Mm-hmm.
Okay, so that's just a philosophy.
Mm-hmm.
And so she doesn't want debt because for her, having all the cash flow that she's got coming in, which is a lot, she doesn't want, she wants that kind of certainty from a security and a safety standpoint, right?
Mm-hmm. Yep.
Okay, for me, I like to use low-cost debt because I believe that I'm hedging inflation. You're hedging inflation too by not using debt because the actual physical property that you own is actually going up because of inflation too. But I'm getting that, and I'm getting debt.
Well, right. Like, I mean, I bought, I have 3 properties, but if I would have hedged them all with debt instead of personal income, I probably could have like 10 properties.
Yeah.
You know what I mean? So that's just really.
But you would also be stressing out a little bit more because your margins for cash flow would be less.
Right.
Right now, think about this. You've got I think all of them paid off, or almost.
Well, 2 of them, but yeah.
So it's kind of the Dave Ramsey method,
yeah,
right? Which is don't have any debt, or I'm kind of in the middle. So I don't like to have a lot of debt on anything that I own personally,
mm-hmm.
and I like to have I just bought a car Friday, and I just paid cash for it, and so a new G-Wagon, a Mercedes G-Wagon, and I And the guy's like, he came in, he's like, well, do you want to finance it? I go, well, how much is your rate?
Mm-hmm.
Like, and I could pay for it, of course. But he came in, well, it's, 3.9. I'm like, I'll just pay cash, right? Because it's above inflation. But if it would have been, let's say, 0.9% or less than 1%, maybe I use somebody else's money and you know what I mean? Because
then you'll have extra money in your account.
Yeah,
you can do other things
so
with.
I always look at. It's not a should I. I look at each scenario, and I look at the price of the debt. Always, price of the debt is so important.
Yep. So Kimberly from Premium. So this is a little, see if you can decipher this. I was reading that you can do a joint venture deal with an investor that gives them the same preferred return and percent of profits as a typical equity deal, but it's not secured by the property and the investor does not own the equity and therefore does not involve the financial lender or have any effect of the future 1031. What do you think about this?
I don't know. I mean, it doesn't make sense to me because if I'm going to get money, let's say from you,
mm-hmm.
why would you give it to me if it's not secured by anything?
Right.
That's the whole point. So I think maybe I'd need more information on that.
Right.
But most of the time when we've syndicated money, people just don't give you money for nothing. They want your car as collateral.
Well,
your
you want
house,
collateral because if I don't have any collateral, you could just take my money and run.
So I'm not familiar with that.
Mm-hmm.
Even the hard money guys, because I have a good friend that does this for a living. He has a big company called Capital Fund, and they do hard money loans. Now we're talking about, let's say, 9% to 12% short-term money. They're all collateralized, every single one.
Right.
And I asked him, I'm like, have you ever had any defaults? He's like one. Like,
right, because there's collateral.
Yeah. So I'm not familiar with something that isn't.
Yeah, Kim, I think, you got to think of it from an investor point of view too. I mean, you only want to invest in something if it's a good deal for both you and the investors. And I know at MC companies, when you guys raise money, it's a good deal for both you and your investors.
Well, we hope so, but our investors are on title.
Yeah, right.
Like people give us money, they're on the deal. We just raised $24 million in a week, and every single person is on title.
Right.
And they're legally get a percentage of that property physically. They can walk it. They're an owner, and that's their ultimate security.
Right. And I love this question, so I want to wrap with this one. It's from Jordy on YouTube. They said, I found a couple of properties in Florida that I could flip or rent, but I'm 19 years old and I can't really get a loan from the bank. So what do I do? Do I get a private lender? And what's the next step? Yeah,
if you're gonna get a private lender, you're gonna pay him more money. Again, getting back to that collateral thing, they're gonna want collateral on that property. That money's out there.
Yeah.
And I would flip.
Yeah.
Because it's going to be a higher interest rate, and you don't want to be stuck with a high interest rate loan. And if you can make some short-term cash.
Right, but I don't think she has enough for the down payment to get the loan. I think that's the problem.
But you can borrow both.
Yeah, and you could also go in with some friends and see if, anybody else has some money that they can lend you and put together a kind of an agreement on splitting up the revenue.
It's a great question. This is what hinders most people. They think that they need the money to do deals.
Yeah.
Okay, I didn't have $24 million in cash when we ended up, putting the deal that we have in escrow right now. But because I had the experience and I knew what I could do with the deal. Mm-hmm. I just had a 15-minute call with Kiyosaki this morning about this deal, and they're asking questions. How is it going to make money? And as long as you have a plan to make the investors' money,
right,
you can make money.
You have to say, this is what I'm going to invest it for. This is approximately what the mortgage is going to be, and this is about what I can rent it for, and then have your taxes and your insurance and all the costs associated with it. And if you can show that to people, then they'll help you out.
Right. So if you know the number, and on a flip, it's simple, right?
Well, I don't think she wants to flip it. I think she wants to either. No. She wants to. Yeah.
Yeah. The hard money is going to be expensive. It gets tight. I'll just tell you, in today's market, borrowing hard money on a long-term deal is not necessarily a good thing.
High percentage, yeah. And then also, she could wholesale too as an option.
Absolutely.
Yeah, wholesaling would be a good option for you. If you don't know what that is, go ahead and look it up.
But, and plus, I think we did a video on it.
Oh yeah, you're right. I think we did over on the YouTube channel.
Yeah.
Awesome, guys. Well, that wraps our show for today. I hope you guys enjoyed it.
Yep.
Don't forget that we have, if you want to join Premium, we have 7 days free. We always answer all the premium questions. Just go to kenmcroy.com/premium and use code PREMIUMLIVE, all one word, and we'll see you next Monday.
Yeah, thanks, guys, as always.